All right, welcome back. And who would have guessed it, right? After a 14% sell-off earlier this year, the markets have staged an historic comeback. And as things stand this morning, this is before we've had the great gains we've had today. The S&P is up around 5% year to date. The Dow up about 3%, and NASDAQ up 5% as well, all year to date. Now, after April's sell-off, a lot of the big investment banks were quick to revise their year-end expectations a lot lower, right? But after this big, beautiful bounce back, that's what I'm going to call it, they're falling all over themselves to revise their revisions back higher again. I think it makes them look cheap when they do that. Some are calling for year-end double-digit gains. Boy, oh boy. Never before have stocks staged such a strong rebound. So strong, in fact, that a lot of the smart money naysayers have missed the rally back, and they may be forced back in to jump on board before the end of the year, and that's going to further fuel gains going higher, making some of these lofty year-end predictions maybe come true. Now, my next guest, he watches this stuff like a hawk. Please welcome to the show, Mr. Craig Bolanos. He's co-founder and wealth advisor at VestGen Wealth Partners up in Chicago. Thanks for being on the show, Craig. You know, you were one of the people that I quoted, and I gave you credit for this, but I was looking for, at that time, April-ish, mid-April, a little capitulation. And you actually said to me, I'm not really seeing it. And as it happens, you were right. There wasn't a ton of retail capitulation. A lot of the folks that were selling was the smart money, the hedge funds, those were the investment banks. They were the sellers. And you know what? I think they have to come back in, and that might make some of these people look really smart by the end of the year. What do you think?
I think so too. I mean, the day is not yet over, but we print a close above that 6147 number. That's a new high, and new highs tend to make new highs. There's people who are going to have to play some catch up this year. I think that's going to go ahead and further propel some of the risk assets that everybody has known and fallen in love with. Of course, those being in technology and the communication area. But, don't write off the fact that individual investors, you're right, Scott, have been incredibly steadfast, and they've all been conditioned by recency bias over the last 5 years to buy every dip that occurs, and they've been well rewarded. Well, that strategy is going to continue to work up until it doesn't, but I don't think that's a 2025 or 2026 ending. Okay,
so I see some of the positives that a lot of other people see. But I always worry that if everybody sees those positives, when they finally do come true, they might not give me the rocket, the rocket juice higher that I want to see. And that would be a couple of rate cuts this year, a big, beautiful bill done this year, and maybe some decent trade deals done this year. Are you skeptical of it? Maybe that not giving you the boost that you might want to see out of it?
Well, I want to be clear. Someone asked me earlier today on the platform of radio whether or not the market's expensive here. And I said, no, I think the market's fairly valued here. But here's what's built into that fair valuation. One, that we're going to have trade deals that are done. Two, that we're going to pass the big, beautiful bill. Three, that we're going to get a minimum of 2 interest rate cuts, minimum, one in September, one in December. Four, that we're not going to have what I call Q2 earnings fall off the planet here off the 4th of July and get some decent guidance. And fifth, that we're going to continue to have non-farm payrolls come in at a reasonable level, which for me is they're going to uptick a bit, but we got to keep those numbers under 4.5%. And if we do, then things will be okay. But there's not a lot of room for the market to move up past that 6,500 level.
Well, I mean, that would still be a good move for the year. I mean, considering where we were, I mean, there are some folks out there calling for double-digit gains, 10, 11, 12%. And we'll see if that can happen. But and you're talking about these recent highs at 61.47. I think we're above that right now, correct?
We are. We're hanging above that. We're going to see if we can close there. I would be very excited to close there this last business day of the second quarter.
And that's going to force some people to come back in with more capital to buy it, right? That's going to be a trigger, correct?
Yep, 100%.
So, I mean, that's what we're looking at here. So, maybe we get some decent earnings on the back of the fact some of these companies are going to be doing better if this economy does pick up. Well, then, hey, that'll be something that maybe also could help with that market after you've got all that stuff. I think all the stuff you mentioned is going to underpin the move we've already had. I think that's the way that I like to say that. Craig?
Yeah, that's right.
Yeah, so love having you on the radio. Thanks for coming on today. Craig Bolanos, he's with VestGen Wealth Partners. He's the co-founder. He's up in Chicago. We're going to